Welcome back. In our last video, we talked about the two main types of business buyers, financial and strategic. But we also discussed a third type, a hybrid, if you will, of those first two, and that was private equity. But how do you know which group would be the most interested in your business? We're going to talk about that today because understanding what type of buyer would be most interested in your business is important when you're preparing your business and presenting your business and pricing your business before you come to market. Now, of course, any business might appeal to any type of buyer, but as a general rule, we've learned that there are certain characteristics that financial buyers look for in a business, other characteristics that are desired by strategic buyers, and then the fact that private equity would look at both. So let's talk about them. First up is financial buyers. You remember in an earlier video, probably more than one of the earlier videos, we posed the question, how much will this business put in my pocket? This is a question that financial buyers need to get answered. This is what they want to know because it is arguably the most important question. So financial buyers are generally individuals. Maybe they're small partnerships, and they're interested in a business that will generate some income, a return on investment. It will provide them with not only a job, but the self-satisfaction of being a business owner, a small business owner. They want to reduce, or they don't want to take on a lot of risk. They're very interested in a lifestyle, if you will, being a business owner and making a little money. So financial size is not the only characteristic that they look for, though. They look for stability. They look for a reasonably stable discretionary income, discretionary earnings number. And they look for simple operations. They don't want the business to be dependent upon the existing owner, his or her certifications or his or her relationships with different buyers and vendors. So if your business is profitable, predictable, reasonably low risk, the likelihood is your buyer is going to be financial. Now, an important characteristic is to understand that most businesses with revenue of less than $1.5 million, those are mostly attractive to financial buyers. So make sure that you have clean, verifiable financials and organizational documentation. Very important. Make it easy for the buyer to buy. You want to make sure that you have clear, documented operating procedures. You want to make sure that your contracts are all clean, current, and valid. And finally, you want to make sure that there's a clear transition plan in place so that it'll reduce the perceived risk that a buyer will have. And buyers are always concerned about risk. Now, second up, is strategic buyers. Now, strategic buyers are probably already in your industry, or they're in an industry closely aligned with your industry. Now, they might want to expand geographically, or they might want to expand into a different, an aligned industry. They might want to expand because they could pick up additional contracts or intellectual property or additional talent or some certifications that your business might have that they don't have, or that some of your employees might have that theirs don't have. So strategic buyers generally will pay higher multiples, but they're almost always more selective. So if your business has some unique characteristics and the opportunity to gain market share, the potential for growth, a strategic buyer is likely to be more attracted to your business. Now, for example, if you own an HVAC service company, the likely strategic buyers are another HVAC service company. And it might be a competitor of yours. We used this example in a previous video. In the next county, they might want to buy to expand their geographic footprint. They might want to buy because you have a particular distribution line that they would like to get, but they can't because of geographic restrictions. If they buy your business, they're able to get the distribution rights to whatever particular line that you have. This is a very strategic move. They might want your customer base, doubling theirs perhaps, or tripling, or just increasing it 50%, whatever it is, and gain economies of scale. But it could also be a business in an aligned industry. For example, a plumbing company. Now, a plumbing company might want your business because they could sell their plumbing service to all your HVAC clients. They could sell your HVAC services to all of their plumbing clients. That is a strategic acquisition. And if you feel that this is the right group of buyer for you, make sure that you understand your strategic and competitive advantages. Your customer and vendor relationships are important. And you want to make sure that you can explain the scalability and the synergies that will result from combining the two businesses. It's very important. And the final group is, of course, private equity, the hybrid. The private equity buyers can be either financial or strategic. Occasionally, they're both. If your business is mid-size, that is, probably with a minimum of $1 million in discretionary earnings, you are probably a target for a private equity group, a small private equity group, but nonetheless a private equity group. Private equity groups are interested in two specific things. They may want a platform company. That is, they're getting ready to target a specific channel, an industrial channel, and they want to get started with a company that can launch that channel. They could also want to acquire bolt-on businesses, something that they can bolt on to an existing company. So they might have a platform company already, and it might be a plumbing supplier. And for example, we used this example in the last video, a plumbing supply company outside of Chicago that's owned by a private equity group. They want to bolt on to that platform, and the ideal categories would be plumbing contractors. So they could buy one or more plumbing contractors to essentially bolt on to their existing plumbing platform and increase the value of both companies by economies of scale in accounting and operations, but also increasing guaranteed revenue for their platform company, because each contractor would be buying from the platform company and therefore reducing the business to competition. So how do you determine what the right buying group is for your business? Well, ask yourself the following questions. How dependent is the business on you personally? Can it operate for a while now without you at the helm? Do you have a good management team in place? Second question, how scalable is your business under new ownership? And the third question, what unique value does it offer somebody already in the industry? So, if the answers point to lifestyle, cash flow, consistency, your buyer is likely a financial buyer. If the answers point to synergy and expansion, your likely buyer is strategic. And thirdly, if you've built a large, professionally managed organization, there's a good chance that your buyer is private equity. It could be, of course, strategic, but private equity becomes interested in businesses that have at least $1 million in discretionary earnings. So understanding who your likely buyer is key to everything about your sale, how you prepare, how you price, and how you bring your business to market. For example, do you put a price on the business when you bring it to market? Or do you come to market without a price, looking for bids? Knowing who your buyer will likely be determines the answer to that question. So, in the next video, we're going to discuss the main reasons that businesses don't sell. It'll surprise you. And this topic always gets a great deal of attention whenever we're speaking to business groups. So hit the subscribe button so you don't miss that discussion, because it's an important one. You need to know these reasons before you come to market. So if you found this to be helpful, hit the like button and put a comment in below here and let me know what kind of a business you have. We may be able to do a video in the near future on your type of business or the industry that you're in. Now, as always, in the description below, we've put in a number of resources that you can use and that will help you figure out how to value your business, how to market your business, and how to get help. So check them out. So in the meantime, again, hit the subscribe button, and I will see you in the next video.